everybody. Welcome back. Really looking forward to interviewing our next guest today, Kraig Swanson from Swanson Reserve Capital. I think he's got some really exciting information to share with us about structured notes today. So excited to have him. Kraig, how are you?
Good, good. Thanks, Matthew, for having me on. Excited to be here.
Yeah, absolutely. Well, let me share a little bit about Kraig to kind of get everybody acclimated to what we'll be discussing today. So he had worked at Fidelity Investments, where he started as a communications analyst back in February of 2014, and he left as the director of strategic communications consultant in May 2024. So he was there for quite a few years, and while he was employed with Fidelity, he facilitated with marketing, sales, corporate strategy, merger and acquisition support to several of the firm's largest and most complex enterprise Fortune 100 clients. And in addition to working with Fidelity, Kraig's been managing his own personal investments portfolio since 2013. And in the past 3 years, he's been specifically investing in institutional structured notes, which is what we'll take our time to talk through today. And during that course of time, he's invested in over 40 notes, and he currently holds 34, in all of which he's actually contributed to his partnership, the Seed Capital. And Kraig holds a Bachelor's of Business Administration degree from Flagler College, which he got in 2012, and that he's also a registered broker-dealer representative with Fidelity Brokerage Services. And in 2024, he also earned from Yale University a certificate of financial markets economic curriculum taught by Sterling Professor of Economics, Robert Schiller. So again, really excited to have you, Kraig.
Yeah, happy to be here. Happy to talk a little bit about my favorite topic, which is our fund and some of the things we're doing with structured products.
Yeah, absolutely. Well, I know that I got to just share a little bit about you there, but I always love to give you the chance to share and introduce yourself to our audience about your both personal and professional life. So feel free to just give our audience a taste of who you are.
Yeah. So excited to meet and talk to the eQRP community. So I'm born and raised in Massachusetts. Lived there most of my life. Went to school, as Matthew had said, in Flagler College. And ever since then, I knew I wanted to kind of move down here and be in Florida. So I've been down here for 9 years. We're shooting this in the summer, so it's hotter than the surface of the sun here. So I really love it. I had worked with Fidelity during that time frame as well down here. And as of recently, got to working with a close friend, and I'll get to that story later, but uncovered structured products and what we could do inside a fund structure. And then I spent most of my career working with institutional clients at Fidelity, as Matthew's mentioned. So really trying to take that world-class experience, put it inside our own fund, and offer differentiated products that they don't offer at a Fidelity, Interactive Brokers, or E-Trade, and bring that to the market.
That's awesome. Yeah, I think your experience is going to be really valuable to our member base because, as we dive into structured notes today, I feel like it's not a familiar asset class to our community, to be honest. And so, again, I'm excited to talk with you today. And I'd like to maybe start, if you could just share, some about your current role and even what led you to start Swanson Reserve Capital.
Yeah. So currently I serve as the founder and CIO of Swanson Reserve Capital. For those maybe unfamiliar with CIO, I make all the investment decisions for the funds. I manage the money. So I decide what allocations things go into. And we are a structured product fund dual share class. So I'm going to focus on structured products today. That's one of our share classes. We also do a quantitative long equity portfolio as well. But what led me to start this journey is an interesting story. So as Matthew mentioned, worked at Fidelity, always on the institutional side for over a decade. And you kind of think when you're in the financial industry that everything that's out there as far as investment products and what have you. So I always considered myself really versed. And close friend of mine down here, really, we've had a relationship for probably over 8 years, ran a family office, RIA, and he was big in the structured product space. Like, I had never heard of structured notes. I had never even thought to engage someone outside of myself to manage my own money. Always been the money manager. Mm-hmm. And I got some approvals to work with him from Fidelity because I was licensed to start doing structured notes. And when we first sat down, I almost didn't believe that these type of products existed, from the protections to how you can participate in the market and all these different things I'll get into. But long story short, and I can't disclose how many clients and families he manages, but it's quite a bit. He has over $1 billion in assets, we got together and said, hey, the quantitative lens, kind of the way I was picking securities in the custom products we were printing with these different banks, it became one of the top portfolios at its entire company for performance. And we thought, oh, we have something here. This would be a really great product to put in a fund structure. And then so that is what birthed Swanson Reserve Capital, is being able to put together some of the most compelling institutional grade securities inside of a fund. As today they're offered, they're somewhat known of in the RIA space, but they're pick and choose. None of them have been put in the fund component. So we felt compelled to do that and offer that to the market.
That's awesome. Thanks for sharing all that. And I think that's where I'd honestly like to maybe spend most of our time today, because like you mentioned, you've been in that space for years, and it even, being in your position, learned about structured notes being years into that industry. So could you kind of give us just a 30,000 foot view, what are structured notes? And feel free to take as much time as you need. I know that our audience will be really interested in learning about that.
Yeah. So I'm going to break it down and use an analogy here that I like to use. But before I dive into, everyone always asks, what we do. And ultimately, we help accredited investors generate income, growth, help pay expenses, their kids' tuition, car bills, mortgage, even a private jet fuel bill from family offices, work with, et cetera, all within a wrapper, an investment hedge wrapper called structured notes. So what are structured notes? $1 million question. And just as some background, these have been around since the 90s. They're more prevalent maybe in Europe. They're making their way much more heavily in the 2000s. They were formerly for institutions only, and then RIAs were able to offer them to the retail public in the 2000s timeframe. So what they are is a hybrid debt security, like a bond, that tracks either a stock or an index or commodity. They're really open architecture, and they're backed by the banks like JP Morgan, banks like Goldman Sachs, really those major investment banks that you may have heard of. And they are also known as very complex products because, as I mentioned, there's really a lot of different ways to create these and participate. So not all structured notes are created equally. I like to level set with that. But the best way I've found comparing this and what we do with structured products is comparing it to a sport. So let's use world-class soccer. So how does our fund make money? I start with this. So imagine you're the owner of your favorite soccer team, and I'm going to use, you can pick any, but let's just say Manchester United, Chelsea, Barcelona, Real Madrid. You pick any, right? You're the owner of that team. Now, as an owner, you never step on the field and start kicking the ball around like the players do. So you have no risk of getting hurt like the other players do. But if your team wins, you obviously get to celebrate in that win too, right? That's your team. So the same thing as we could draw a correlation to principal protected structured notes that we buy. So what does that mean? It means there's no risk of loss unless your team, AKA the bank, JP Morgan, Goldman Sachs, whoever we're buying them from, goes out of business. That's how you lose. They're backed by the full faith and credit of those banks, and you'll still get to share in the wins of your team. You're the owner of the performance of the index or stocks that are tied to him. In the world of soccer, that's your players, winning the game or participating well and getting that win. So that's principal protected. I would argue those are the safest way we invest. So we have an allocation to those. And then how do we create income, right? How are we yielding off distributions in our fund? So I like to relate this to, they're called income notes, and they're like our stellar defensive players. They're not built to score goals. They're built to protect and stop the other team from scoring and, losing too badly, right? We have our defensive players. So income notes that we buy are protected up to 50% to shield our investors from losing any money. We at Ethos, heart of our fund, we believe in capital preservation. Very much so agree with Warren Buffett's rules to investing. Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. So we like to embody that. But I like to use this analogy of, it's like starting the game up 5 goals because you already have that protection. And the other team, aka the market, has to go against us in the securities we have picked at least 6 goals to even start feeling worried. And then all the while, we're getting paid quarterly income payments while this game is going on. So this game lasts, in our world, 3 years. We buy 3-year term structured notes on all of these type of securities I'm going to go through. But income notes pay out, and of course, there's always a catch, right? They pay out until the other team, aka the market, goes against us over that barrier of 50%. So say we get to 6 goals, we're down 5 to 6. There's other features we put on there to protect us even further. So there is something in the structured note world called 1-star, which means if, let's just use a soccer player, if one of your goal scorers, if one of the other teams scores 1 goal, meaning it's up 1 penny at the end of that 3-year term, so you have that note, that means that you are completely protected from the investment. Like you could have a Tesla, Apple, and Amazon. Tesla could go out of business. Amazon could go out of business. As long as Apple's up in that 3 years, your principal is entirely protected. So it's a really unique feature we can bolt on to our income products. And you could still lose the game and still get paid, just like the players do in this scenario. So the only way to really lose bad is if you're getting beat 6-5 over a 3-year period and you're staying down. And again, at the beginning of our story, we pick the best, what we believe is the best quality teams, the Barcelonas, the Chelseas. You know, that's how we're comparing them to the indexes of the S&P 500, very well-known indexes that we're buying. And so that's income notes. And then we're going to get to my favorite here, is how we grow your money in long-term growth. And what players get all the glory in kind of the soccer space is the goal scorers, the strikers. So those are our growth notes. Much like the stars of soccer growth notes, they pay the most yield and we achieve the most compelling deals on these players. So we have the highest allocation in our fund to these types of products. And like all players, they come with contractual features. So protections up to the 40-50%. That's consistent. However, what do strikers do in the game eventually? What do? They score, right? And they get all the glory. So our notes fetch anywhere from 17 to 35%. So they're substantial double-digit returns. And typically, when any star player, and if all, like we buy baskets of 3, 1, 2, you can really go any way we would like. As long as they go up 1 penny when the clock runs out, that means your chosen stocks, aka the players, have scored that 1 goal, 1 cent positive. You win the game and you participate in that entire upside. So I have some that pay, you know, it varies, but there are those. One that I own in the fund today, it tracks Microsoft, Apple, Google. If they all go up in 1 penny in 1 year, we make 30%. And there's multiple other protection features like a 40% barrier. So it's a very compelling way to play it, in my view, a little bit more risk averse than buying, you know, and that's why I always get asked, well, why not just buy the best companies, right? Why not just buy the best stock in the players? And that's a great question. And of course you can buy the best players yourself, but if one goes down, they're hurting out of the game, right? And that can impact your portfolio. There's no added protections like structured notes. And so I look at it as like sports and investing is not so different. And we use this analogy. If you want to trade with the top leagues in the industry, like the JP Morgans, the UBS, the Goldman Sachs, and secure the top companies, but get paid in all these 3 different outcomes. If you lose the game 4-1, you're still getting paid. If you tie the game, you're still getting paid. And if you win, well, you win, you're going to still get paid. You know, and then I always have to use the disclaimers, like you could still lose money in structured notes, but the probabilities and the way we price them is much, much lower than participating in the general market. So you can still lose games, money, if you get beat over the protection features of any given structured product. But sometimes it's great teams don't perform as they did in the past. You know, past performance doesn't equal that future result. But if we already knew who was going to win, we'd never watch games, right? We'd never watch sports. That's the whole reason we play. So as long as you're making the right, proper selection and management, which we feel we certainly do, and have a rigorous test of what we're buying, we're able to offer some very differentiated products to the market. With one of our main providers doing 20 billion in 12 months in 2023. So we think this is going to be a very sought after. We see it is in the RIA space, but put in a fund structure and really being able to package it for our investors. We think it's a really compelling offer, and we invite those members who are interested to become a proverbial owner, so to speak. So
yeah,
that covers it.
That's awesome. No, thanks for the 30,000 foot view. I love the sports analogy. I think that really helps kind of put the cookies on the bottom shelf for people to be able to understand, you know, at a high level, you know, what's happening within those different funds there. So I'd like to ask you next, you know, what type of investor do you think should consider structured notes as an alternative?
Yeah. So great question. Our investor base tends to be definitely in the retirement space, usually seeking income, growth, capital preservation as three key focuses. If I could use another sports analogy, we're getting guys on base, like if we're choosing baseball, we're getting guys on base, we're hitting doubles, we're hitting triples. We're not seeking risky outside investments to receive an outsized return. That's really not this fund. And I'd say that's kind of our investor base, is those are looking for those three categories to be ticked.
That's great. Awesome. And I think honestly, last question for you, because I know people are going to be eager to chat with you and get a hold of you after this call. But what's something that I haven't asked yet that you'd like to share with our audience?
Yeah, sure. So question I get asked a lot is, can I find these on my own? And it's really a institutional product that we offer. So
Mhm.
these are not offered through to direct to retail. You have to be an advisor in this space to get that facilitation. And we do have this is a capped fund, so we do have 99 spots. And you can reach out to us we're pretty active on social, on LinkedIn. So you can follow myself, Kraig Swanson, our business page, Swanson Reserve Capital, and also reach out to us at our main phone number and info@swansonreserve.io as well for email. So look forward to hearing you and being part of the community and just helping elevate this topic and bringing it more forefront to the market.
Yeah, absolutely. Well, Craig, thank you so much for sharing. And yeah, I'll reiterate his website is swansonreservecapital.com. You can reach him. It was info@swansonreserve.io. Is that correct, Craig?
Yep, that
Okay,
is correct.
awesome. Well, everybody, thank you so much for tuning in. And we hope you have a great day. And we'll talk to you all again soon.